what I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, what's up, guys? Jay Martin here, CEO of Cambridge House, and we are searching for our next investment opportunity. I'm joined right now by Christian Milau and Greg Smith of Equinox Gold. We haven't had you guys on before, so welcome. Good to see you.
Thanks, Jay. Glad to be here.
Yeah, thanks, Jay.
Well, I'm excited to dive into the story because, you know, Ross, your chairman, Ross Beaty, has been on our show 3 times in the last year. And so through him, you know, we've talked about Equinox a lot. But usually when I sit down with Ross, I'm hitting him with questions about the gold market, the silver market, the copper market. Most recently, it was the renewable energy sector with his experience at Altera. And so I'm excited to sit down with you two and get into the Equinox story. And obviously what everybody wants to hear about right now is your recent acquisition of Premier Gold Mines. I thought that would be a great place to start. And so, Christian, I'll open it up to you. You can just walk us through your rationale for that acquisition, why you did it, and what it means for shareholders. That would be a great place to start.
Yeah, sure. Thanks, Jay. It's very topical. I guess about a year ago, we actually announced the merger with Leagold. And so about almost a year to the day, we announced the acquisition of Premier Gold in December. And this story just fits perfectly into our strategy. Our goal really is to become that sort of million-ounce producer on a sustainable basis. And, you know, we've got 7 mines and we have no presence in Canada. And this is one of those large-scale permitted deposits that's basically ready to build. And we're building a bit of a track record here of almost building a mine per year. And so there's a lot of people that have seen that Centerra sold its 50% in this asset called Hard Rock in Ontario to Orion. And Orion's one of the largest shareholders of Premier. But basically what happened was it unlocked a situation that would allow this asset to move forward and get into construction and built and up and running. And it'd be a 400,000 ounce producer in Canada, in Ontario. So that really attracted us to the story. And we've known the Premier guys for a few years. You know, we also know some of their core shareholders being Orion and Sprott and that. And we just felt that with adding this Hard Rock asset and a smaller Mexican mine, which we'd end up picking up called Mercedes, it really fit into our portfolio where long term we have a quarter of our business in Canada, about a quarter in the US, a quarter in Mexico, and a quarter in Brazil. So it really balances out America's portfolio. And we were pretty bold a few years ago when we started Equinox Gold saying we want to be the premier America's gold producer. And some days in the early days, I think people are kind of wondering, how are you going to achieve that? Well, I think this is one of the key final puzzle pieces that fits in and really sort of balances that portfolio. And then also in addition to that, we're acquiring those sort of 2 assets with some exploration properties in Ontario as well. And then on top of that, there'll be a spin out of i-80 Gold, which is really the Nevada-based properties of Premier. And I'll let Greg talk to that in a second here. But it creates a second company that will share in some of the upside, which is great for our shareholders, but it allows Ewan, who runs Premier Gold, to go off and create some value. And, you know, you look at Solaris Copper, or Solaris Resources, that's called now, was a spin out from Equinox as well, and is now a $600-700 million company. And it was on our books for, I think, $12 million for 30% of it. So we see ourselves as supportive shareholders of groups that can actually create some value and things that are maybe too small for us. And so this will be what we'll do is we'll bring in the 2 core assets of Premier and some of the exploration, spin out i-80 Gold. Ewan will run it. It'll be Nevada based. And I think both sets of shareholders will share in the upside. That's been a good track record of ours, is actually both sets of shareholders winning here. It's not just a one side wins. It's usually a 1 + 1 = more than 2. And I think this transaction fits that mold just like Leagold did last year. And if you're interested, Jay, you know, when you have a second here, we can run through the i-80 transaction as well.
Yeah, I'd love to.
Greg will do that.
Okay. Yeah, let's go right to it, Greg.
Yeah, I think, you know, backing up a bit, just to reiterate some of the things Christian said, you know, we've been very, I think, vocal throughout the last number of years on how we want to build this company. We're building it, obviously, through development of our assets, but also through accretive acquisitions. Even at your conferences, you know, standing up there the last several years saying the same thing. If a transaction comes to us that we think is going to be beneficial to our shareholders and is on strategy and helps us achieve our goal of, you know, that million-ounce producer status, of course, we're going to look pretty hard at it. And this was a rare opportunity. It doesn't come along very often where you have a an asset like Hard Rock, it's fully permitted, it's in Canada, it's engineered, it's effectively shovel ready, an opportunity to acquire a meaningful interest in that with a great counterparty in Orion Mine Finance, that's fully funded and shares the same sort of vision we do for building that asset. So, from an Equinox perspective, in the Americas, totally consistent with our strategy, fully permitted, high quality asset that we can put into our construction pipeline basically right away. So, the opportunity was one that we felt was incredibly compelling, and frankly, for Equinox, I think has been a fantastic transaction. And if I'm a premier shareholder, I'm really winning in this transaction as well, in part because now, Equinox is fully financed to build Hard Rock. Premier doesn't have to go and raise, $500 million to build it.
Right.
But they also retain that exposure plus exposure to our existing asset portfolio, which also has a tremendous amount of upside. So Premier those shareholders become Equinox shareholders. And then on top of that, they get this 70% interest in i-80 Gold Corp. And i-80 is going to be an entirely Nevada-focused gold company. It's got production from the South Arturo mine that's a 40/60 JV with Barrick Gold or Nevada Gold Mines. They've also got McCoy Cove, and then on closing of the transaction, they'll also have the past-producing Getchell mine, also in Nevada. These are all in the same region, all highly prospective existing resources. McCoy Cove is one of the highest grade deposits in America, and they've got a great team in place in Reno that'll manage this company with the involvement of some of the existing Premier management team today and board members today. So, a good deal for the Premier shareholders as well, and we're going to end up with two companies that are holding the assets they should, right? Equinox has the large scale Hard Rock project, the mine in Mexico, which fits in with our Mexican portfolio. And then you've got the SpinCo, the i-80 Gold assets, all together in one company focused on developing those assets and bringing them into production.
Okay. And on the back of this is a $75 million financing that I believe Ross is underwriting himself. Is that correct?
Yeah, that's correct. So Equinox is going to undertake a $75 million financing. We haven't priced that and started to execute on that quite yet, but we'll do it in the context of the transaction. And really it gives certainly Ross a chance to maintain his interest in Equinox, which he's done all along the way as we've built this company. We may, have a few other people participate in that financing, but it's a small incremental bump to Equinox's treasury. I mean, when you look at that financing plus what we already have on hand, plus what we have available in terms of our revolving credit facility, we've got liquidity of over $600 million. So that's a small piece of that, but generally fully financed already, even with or without that financing, to execute on all of our development, including construction of Hard Rock, when combined with our operating cash flow.
Okay. Now talk to me about jurisdiction, because from the jump you guys were set out to be America's premier gold producer. Why America's, and why is that? Could you see that strategy changing, or will that be the mission?
Maybe I'll just start off with that one. When we set out, we started out, I guess, with one development asset in Brazil, and we added a California asset fairly quickly. And in a sense, we were willing to go where the gold was or is. And running it out of Vancouver primarily allows us to work through the time zones and actually travel more easily in the Americas. Ross has had a long history, obviously, of building Pan Am Silver in the Americas. Myself and Greg have built companies in the Americas, and it was also something that our shareholders were asking for. They said, we like the Americas sort of risk profile. And again, a number of us have worked in Africa and other places, and we really had a desire from our core shareholders, being Ross and Richard Warwick and a few others and a few institutions, that said, we think you can get a more premium rating, and you can also manage the business more effectively in the Americas. And I think that's played out that way, and there's lots of opportunity as well. So we've sort of started out in Brazil, California, but then obviously diversified into Mexico and now into Ontario or Canada. So it really does balance it. Would we never go elsewhere? I don't think I'd close the door on anything completely, but it's a lot easier to manage things in pockets or cores in these countries. Maybe we could add a country or two along the way, but likely in the Americas. But, as Greg was saying earlier, if an opportunity is really compelling, we do look at it, even if it is outside of those jurisdictions.
Of course. Yeah. Now, can you walk me through the production breakdown? You've got, Canada, US, Mexico, and Brazil. And Christian, you touched on, relatively 25% split. But how does that production actually break down between your 4 locations right now?
In due course, when everything's sort of ramped up and assuming hard rock's up in the next few years here, because we hope to start construction later this year officially, you'll have about 200, sometimes between 220, maybe 230 or 40,000 ounces per year coming out of Ontario. In Mexico, you're probably looking at 350 to 400,000 ounces a year with the 2 mines. In Brazil, we've got about 300,000 ounces currently, and we probably move closer to 350 or 400 with Santa Luz coming on later, I guess this year it'll be done, actually, construction there. And then the last one, California, once you've ramped up Castle Mountain Phase 2, you'll probably have, 300 to 400,000 ounces between the 2 mines there, because Castle Mountain's going to be a good 220,000 ounce producer on its own. And then you add Mesquite in. So, almost balanced between them. And probably in terms of valuation or net asset value, it is pretty reasonably equal. And also resources and reserves are actually reasonably split, almost 25% between them.
Interesting.
Yeah, I like taking that. I like kind of zooming out, or looking forward those 3 years when you've got hard rock online, you've done your expansion of Los Filos, and you're completing your expansion at Castle Mountain, and you've got, north of 800,000 ounces a year just from those 3 mines. Then you still have Mesquite and Aurizona and Santa Luz and the other projects that take you well over 1 million, but you've got those 3 core mines that are producing 800,000 ounces plus a year. That's a really great place to be in terms of an asset portfolio.
And when you start with 15 million ounces in reserves, and you kind of look at that, that's a 10 to 15 year sort of mine life at 1 million ounces a year. So it's a really nice starting point.
So you guys have been super aggressive in the last couple of years since launch. And Greg, you touched on your cash position. What was it, 600 million roughly in working capital? So talk to me about what's next. Are you guys in hunting mode? I've been curious about, with all the travel restrictions we've been experiencing, how much pent up M&A demand there might be, because people haven't been able to get on the ground and kick the rocks, so to speak. But I'd love to know what you're thinking. I mean, what's next for you guys?
You want me to jump into this one, Christian? I guess I would say, Jay, certainly the first 6 months of the pandemic slowed everything down from an M&A perspective. And it was really challenging for people to start new programs. I mean, we've been able to do a deal through COVID, albeit in Canada, and we had to use consultants to kind of go to some of the other assets, particularly in Mexico. But I think companies are finding ways to navigate COVID a lot better now and the restrictions, and are able to get due diligence done. Certainly, we were able to do that in this transaction. We did a lot of due diligence. I think that this is the type of market that will breed more M&A going forward. For sure. And so I think we'll see a lot more of it in 2021. And I think there is some pent up demand, for Equinox, and Christian can stop me whenever he wants. Our strategy hasn't changed. We want to grow through development and then also accretive acquisitions of other projects. And, we don't have to do any deals. We have a great growth profile. I think the best out of our peer group. We've got a great portfolio of assets with a lot of development potential and expansion potential and exploration potential in the portfolio today. So we don't have to do anything, but, part of our strategy is growth through acquisition. And if we see transactions that make sense to us, and this hasn't changed from the day we started this company, we've got good access to people. We've got a great technical team. We're building this company so that we can scale it with our Vancouver head office. And so certainly I'm always hunting. Let's put it that way. Christian can say no and Ross can say no, but I'm always hunting. That doesn't change.
I think the one thing that is changed, though, is with the gold price increasing and valuations of, call it, just use an example, single asset producers in Canada having gone up, there are things that are less accretive or dilutive now. So you do need to be a little more creative or look at ways of unlocking value or doing something that relatively makes sense. So I'd say, a year or 2 years ago was slightly more straightforward in terms of valuation metrics to do acquisitions. So, we look at this deal, I think we unlock a situation with Premier Gold and allow both sides to see the value creation and accretion. So maybe a little more creativity.
Okay. Now I want to touch on any trigger points. So we've covered the assets and the recent acquisition and the exploration upside, and what we can expect out of Ontario moving forward. Any other trigger points that a new investor to the story should look for in terms of how, what's going to happen in the next near term, 1 to 2 years?
For sure. I can give you a few thoughts on that. I mean, we've got a bunch of drill results coming from various mines. Probably Aurizona is first up. We'll be doing an extensive exploration program across the assets that are less than 10 years in life. So you'll see Mesquite, Aurizona, Santa Luz, Fazenda, et cetera, continue to show results throughout this year and next year. We've got 2 studies for upsize mines coming, one being Castle Mountain in California coming in Q1. Also, the expanded Los Filos coming around the end of Q1 as well. We'll be building Santa Luz, which is the Brazilian mine that'll produce 100,000 ounces this year. And it should be done around year end, pouring gold in early Q1 next year. We'll get into expanding and building Los Filos later this year, the carbon and leach plant. We will be permitting Castle Mountain, so it'll take us a couple of years before we actually get into construction of that one. And then Hard Rock, we hope to get into full construction later this year. And there's a great team in place in Ontario already. So it's kind of standalone and ready to go. It'll just take us a few months with Orion to get our sort of feet, or our hands, of our seat behind the wheel, essentially. So there's lots of activity with kind of exploration and internal development and growth that we'll keep sort of, putting into the market, and it'll be fairly consistent over the next 1 to 2 years. And when you look at our valuation right now, we're sort of trading on that sort of 0.6, 0.7 times net asset type multiple. And it's more like a single asset producer or a smaller, more junior company. And I think it's a great opportunity at the moment for those new investors to get in and really look at the opportunity to get a re-rating. And most of our peers that are multi-asset, multi-producing companies in the Americas tend to trade more like 1 times net asset value. And so as we execute on our plan and we start to deliver and hit 1 million ounces of gold per year, I really see that re-rating as being something pretty exciting in our portfolio. And you don't see the growth profile like we have. I think we're at over 50% per year over the next couple of years here. And not many companies have that kind of growth, particularly at this scale. And the growth is coming back again. This is depleting industry assets, so it's coming back.
Mm-hmm. Okay, now, one thing I'm curious about, because everybody that watches this channel knows, like, I focus on the people first. Every time, all the time. You got to play to your strengths as a retail investor. And my strength is my Rolodex because of the conference business. I'm really fortunate. I get to have a lot of conversations like this and connect with a lot of amazing personalities. So I'm curious how the dynamic works at Equinox Gold, right? We've got Christian, CEO, Greg, president, Ross Beaty, famously known as the broken slot machine in this business, as the chairman. And, an interesting bullet points is that Ross's first public company was Equinox Resources. And so he's talked about this on the show. This is the bookend to his career. And he wants to go out with a bang, which is, we're watching this unfold. How does the decision-making work between the three of you? And how do you delegate responsibility, et cetera?
Maybe I'll just kick off, Greg, but keen to hear your comments as well. But I see it as a bit of a partnership here. And, Ross has got the reputation and the history and a track record that certainly Greg and I can't compare to. But, we're probably the guys in the trenches who enjoy this part of it. The ego part we put aside. And actually, Ross is roughly, call it, a generation ahead of us. So it's been really fun to work with someone who's had that track record and following and sort of work alongside him. And I think Ross has really valued the partnership aspect of it, because when it comes to decision making, it's a wider group than just us three. But certainly us three are a core part of it. And we're very open and have a lot of discussions. And I tell you, Ross, Greg, and myself probably talk every few days. He is a non-exec chair, but it's a very active non-exec chair in terms of financing and strategy. He's very active. And I think we respect each other. We have a very similar philosophy on building a business, keeping things frugal, keeping it as lean and creative and entrepreneurial as possible. And that's been Ross's hallmark over his career. And I think Greg and I come from that mold to a certain degree, and we put our own money into the company. So we treat it as though it's an owner managed business. And that does change decision making. Every decision impacts the bottom line for our own investments. And that does make us think hard before we do a deal or financing.
Mm.
Yeah, I'd agree with that. I would say, we definitely talk through things. We're not scared to share our opinions. We'll beat each other up. You've got to have a thick skin. You've got to, Christian or Ross won't hesitate to tell me if they think something's a bad idea or a stupid course to take. And I'll share the same comments if I have them. And I think it's working really well. I mean, it's very much, it's still a pretty small team given the size of the company. We've kept our office small. We've kept the executive team pretty small, and we talk constantly. And, COVID, even with COVID, we're still either, if we're not in the office, we're on Zoom or we're on our phones all the time. And it's been good. And, Ross does play an active role, certainly in terms of forward looking and strategic thinking and thinking long term and big picture for the company. And, it's great fun for us certainly to have that kind of runway to build a company, and to have that support to build a company. That's part of what really makes Equinox a fun place to be.
Got it. Okay. Well, look, I'm really glad that both of you could make it on and, introduce yourselves to my audience so we can hear the story from you. Christian, Greg, thanks so much. It's been great connecting with you and hearing firsthand about the recent transaction, but in addition, the grander vision at Equinox. So thank you both.
Great. Thanks, Jay.
Yeah, thanks, Jay. Appreciate it.